Hey guys, this is Eric Pekarski with Infinite Prosperity Live Trader, and it is Friday, March 10, 2017. It's been a quiet week for me. A lot of the positions that I was looking at never really presented the entries that I would like to execute, except one. I've taken one trade this week, which is also the first trade of the month, and it was taken on March 9th for 2.87%. So with that said, let's break it down. Swiss yen long hybrid trade from Thursday, March 9, 2017, closing for 2.87% on Friday, March 10, 2017. So this is another really good hybrid trade with confluence all the way from the weekly down to the 5-minute chart. So with that said, let me start off by digging into the higher time frames. Now, before I jump into this analysis, I want to just start off by mentioning that a lot of live trader people actually did take this trade, but there was also a big chunk that did not execute this position for two reasons. One was the daily 50 EMA, and the second reason being the 4-hour lower high. Now, they're all valid concerns, however, I did find them irrelevant myself, so I will dig deep into that during this video as well. But with that said, let's start off by actually breaking down the weekly chart. And when we zoom in on this weekly chart, we can clearly see that price was trending downwards. It was making these lows and lower highs, and then it hit horizontal support and resistance at roughly 102, 104, that general region, which was also previous highs multiple times over here. So as it hit that level on the weekly chart, after that, price actually broke back up to the upside, broke that weekly 50 EMA to the upside, and came back to retest the weekly 50 EMA. As you guys see, what we also have here is horizontal support and resistance. These previous lows over here, this is also extremely good horizontal support and resistance on a daily and even the intradays as well. So now when we zoom in a little bit closer, we'll notice that there was a very strong rejection off of this level. So as the weekly chart actually broke out to the upside, it pulled back to reject the weekly 50 EMA and that weekly, daily, intraday horizontal support and resistance area with this bullish engulfing reversal. And as I saw this bullish engulfing on this weekly chart, right away I was looking for a continuation play to the upside. So with that said, we need some kind of confirmation on the daily chart. Let's see if we have it. Right, so now that we had this bullish engulfing on the weekly chart, we need some kind of pattern, some kind of a higher low or something like that on the daily chart. On what we actually have is a higher low and a head and shoulder pattern. Left shoulder, head, right shoulder, and continuation to the upside. Before we dig into this, let's again zoom out on this chart and see what we got. And there's that same level again at 102. Same kind of lows here as we saw on the weekly chart. Again, same level. So again, really good here back in 2014, multiple rejections. But even more than on the weekly, when we zoom in a little bit closer here to 2016, beginning of 2016 offered us beautiful rejections, and then price broke down and actually retested from the downside a couple more times over here. And then that brings us to current time. And here during the recent time, what we had again is a massive breakout to the upside. That was that bullish move on the weekly chart as well, which closed above that weekly 50 EMA. Then as the daily chart made this high, we had a double top over here, a shorter once over here, then price went up to form a triple top, then a low, then a lower high, and a lower low. And at this point, it was looking like a potential continuation to the downside. However, this level was broken to the upside. And as it broke to the upside over here, this was that weekly bullish engulfing candlestick, giving us the rejection on the weekly chart. And in this case, we had a break back above support and resistance. If it was truly bearish, this level should have been rejected because we had horizontal support and resistance, a descending trend line, a daily 50 EMA here. It was trending downwards as well, making lower highs and lower lows. But instead, price broke back above this level, meaning that there's bullish momentum there. So now that we had this bullish close, we had that bullish engulfing on a weekly chart. Now, this week, I was looking for a pullback to retest this level, and that's exactly what we got. So price pulled back again to 112.5, roughly that general region. One rejection, second rejection, third rejection, breakout, retest, fourth rejection, and now we have a higher low. We also have a break and retest of this descending trend line, which is an extremely good level on the 4-hour chart. And again, we have that head and shoulder pattern, left shoulder, head, right shoulder, which in this case is a continuation pattern to the upside. So the daily chart is great. Now, the daily 50 EMA, so that was a concern to some people. However, we all know that EMAs, they're best when the market is actually trending, when it's moving, not when it's moving sideways, not when the EMA is sideways. In those kind of cases, like even here, we have examples. You can see that as soon as it started ranging sideways, EMA was broken once, twice, 3 times, 4 times, 5 times. So going long through it again at this point to me is not a concern. In addition to that, we had much stronger support below, which was this horizontal support and resistance level, Fibonacci retracements, and this descending trend line. So again, that's the higher time frames, that's the weekly and the daily. Now let's see what the intraday charts actually gave us at around this time over here. And starting with the 4-hour chart here on the top left. So what we have again is that head and shoulder pattern. You can see it clearly here. It's the same horizontal support and resistance level as on the daily and the weekly. It's again really good on the intraday charts, as we can see right here. Let's just zoom out. There it is, and beautiful rejections off of this level again, same as on the daily chart. So again, a really good level, and here we have that head and shoulder pattern. So left shoulder, head, breakout, retest, right shoulder. This descending trend line is actually that trend line from the daily chart. This one over here connecting the highs. So it's the same level on the intraday charts. And again, you can see that was a beautiful break and retest of both that horizontal support and resistance area from the higher time frames down, and a break and retest of this descending trend line. Then we had a phase line break to the upside, and as it broke out to the upside with very strong momentum, that actually confirmed this rejection, and that was actually what gave us that head and shoulder pattern, giving us that higher low here, confirming that right shoulder with this breakout. So as the breakout happened, that was all great, that's good. Bullish price action here is perfect. However, prior to the entry, there was this potential lower high, which means bullish momentum is weak, because it never continued higher at that point and formed a high test and a bearish candle, a potential lower high. So I see how that is a concern, because that is a concern to me, and that's why this trade did not really make my initial watch list. But because of all the reasons from the higher time frames down, it is something that I was watching. But because of this, I was pretty much watching just to make sure that the 4-hour chart actually stops and it does not continue lower. And it did stop. The two candles prior to my entry over here were dojis. We had this bullish long-legged doji, and then we had this smaller doji at 2 a.m. GMT. And then I went long here during the London session after the 4-hour chart actually slowed down and gave us another higher low. So that's why this lower high initially was a concern, but then later it was not a concern anymore, and that's why it was irrelevant to me. So that is good. The 4-hour chart again at that point is good, and we had plenty of support here below. So that's the 4-hour chart. Now on the 1-hour chart, same kind of horizontal level as on both the intraday charts and the higher time frames. And what we had here, as the 4-hour chart made this right shoulder, well, you can see on the 1-hour chart we had slight bullish MACD divergence, then we had a double bottom rejecting that level, and then we had a beautiful squeeze to the upside, giving us a strong higher high. So previous high, higher high, and a pullback to that 1-hour 50 EMA, giving us a higher low. So as this pullback happened, that was a good entry on the 1-hour chart, but that is also when we had that 4-hour lower high on the 4-hour chart there. And as the 1-hour chart gave us that pullback to the EMA, on the 4-hour chart we had a high test and a bearish candle. And that's why, again, I waited a little bit more on this 4-hour chart for that deceleration to happen, which on the 1-hour chart actually gave us beautiful deceleration. What we had here on the 1-hour chart was deceleration at the 1-hour 50 EMA, 0.32 Fibonacci retracement, and the pivot. Price stopped right in this level and failed to break it to the downside. Instead, it decelerated here, rejected it, and when we zoom in, it broke to the upside as well. It broke this descending trend line to the upside, giving us a nice breakout. And as this breakout was happening here on the 1-hour chart, at that point we already had that 4-hour confirmation. The 1-hour confirmation was happening at this point, which was the breakout, which meant that this level actually held as support, and now the bullish momentum was continuing. And as this candle was coming to a close, 5 minutes before it actually closed, I already executed live, because the 5-minute chart was already sitting above that 5-minute 50 EMA, and there was really nothing else I needed to wait for. So I executed live at that point with a 40 pip stop, and again, the 40 pip stop placed me below all those levels, below the 1-hour 50 pivot, every single Fibonacci retracement, including 0.618, and below the 4-hour 50 EMA, as you guys can see over there. So good stop placement. And again, target wise, due to the fact that we do have a bullish engulfing on a weekly chart, the momentum here is actually from the weekly time frame. And when we look at the daily, we have confirmation. We have a start to a potential new wave here, a potential new trend, because of this continuation head and shoulder pattern. So we have a bullish engulfing on a weekly chart, a break and retest on the weekly chart, and we have this continuation head and shoulder pattern on the daily chart. So this is a potential trade all the way up to the highs, which on a weekly time frame is not even that far away. However, with that said, my plan was never to push it that far because I wanted to exit before NFP. So I took this trade on Thursday, NFP was Friday, so I pretty much just wanted to push it as high as possible and exit at the best price before NFP. So after the entry here, price popped up on the 1 hour chart, you can follow, and started making these higher highs and higher lows, holding this phase line, holding the 5-minute 50 EMA as well. And then finally, as it hit R1, the phase line got broken to the downside. We had a triple doji over here, and then a breakdown started to happen. And at that point, we also had a break below the 5-minute 50 EMA. That was also the London session, so the volume was picking up. And at that point, as the 5-minute 50 was broken, I exited for 2.87% and 115 pips. So that's the trade here. After my exit, price just consolidated for a few more hours. Then NFP happened over here, and you can see on the 1 hour chart, price started its pullback during the New York session. So that is it, guys. And again, this is Swiss yen long hyper trade from Thursday, March 9, 2017 for 2.87%, closing on Friday, March 10. And that is it, guys. So we hope you enjoyed this live trade recap video, and I'll chat to you all next time. Take care.